channel. Remain your friend, your tutor, Oluwagbemi Akiade. Welcome to my financial accounting class. Under this subject, we are going to be doing justice to a topic on double entry principle. Double entry principle. This is a topic, this is one of the foundation of financial accounting in which students are expected to understand in total so that your foundation can be very solid. Now, in that regard, what's the meaning of double entry principle? Double entry principle is a principle of duality concept. It's a principle of duality concept. What do I mean by principle of duality concept? It has to do with a system whereby a debit entry must also be corresponded with credit entry. It's a system of twofold. It's a system that has twofold, that is the debit side and the credit side. Now let's look at this illustration on the board. The illustration says sold goods 20,000 naira by cash. Sold goods 20,000 naira by cash. If you look at this illustration very well, this is what we call business transaction. This is a transaction that has taken place. And in double entry principle, we are told that for every transaction, there must always be a true account that will be involved. And if you look at this illustration now, sold goods 20,000 naira by cash. The two accounts that are involved in this question, in as much that you are selling goods out by cash. So that means the two accounts involved here should be sales account and cash account. Sales account and cash account. So these are the two accounts involved. Now, having identified the two accounts involved, you now have to also identify the account to be debited and the account to be credited. You know, I've told you that in double entry principle, we are talking about two votes. We are talking about duality. Duality means two things. That these two things must be involved, which means that one account will be debited and the other account will be credited. Now, having identified the two accounts involved here, in which we have said that we have sales account and cash account. In accounting, the left side is called debit side, while the right side is called credit side. So the same thing will be done for the second one too. So now looking at these two now, sales account, when you sell out goods, when you give out goods, you credit the giver and you debit the receiver. That's what the law says. The laws of double entry principle says that we credit the giver. So the sales account is one giving out. So we are to credit it by using cash. That's 20,000 naira. So while the cash account is the one receiving, so the account receiving is going to be debited. So we debit this one by using the word sales, 20,000 naira. So we have debited cash account and we have credited sales account. It's very simple as ABC. Now let's look at another one now. There's another one. Let me say that purchase furniture 30,000 naira cash. That's another illustration. That's another transaction. Purchase furniture 30,000 naira cash. So in this instance, we have to identify two accounts as we have done in the previous one. So and there are two accounts, some students will say that the account involved here will be purchase account and cash account. That is wrong. Anytime you see an asset, maybe at the front of purchase or at the front of sales, the asset at the front of either of the two is going to supersede that of either they gave us purchase here or they say sales here. So the asset here is the account we are going to use. So that means we are using furniture account and cash account. So those are the two accounts involved there. Furniture account and cash account. So having identified that, so having known that, what we are going to do before we proceed, try to always subscribe to my channel. So and also always press the turn up button, the notification button, so that you can be aware anytime I drop my academic content like this, so that you can also be aware. So try and subscribe as you are watching. Now furniture, now we have identified the two accounts here, the furniture account and the cash account. So having known that, which account will be debited, which account will be, so the account that is giving out will be credited, the account that is receiving will be debited. Now looking at this illustration now, purchase furniture 30,000 naira cash. So now which account is now debiting, is receiving? If you look at this question very well, we are purchasing furniture, so that means the furniture is the one receiving, the cash is the one we are giving out. So the one that we are receiving is what we are using to debit. So we now say here cash, we are debiting the furniture account with 30,000 naira, and we are crediting the cash account with the same amount, 30,000 naira. So if you understand this, let me give you a take home. Now let's assume that we have sold equipment. 25,000 naira cash. So now let's solve that. Sold equipment 25,000 naira cash. So if you understand what I've been doing, let's try and solve that. So we'll see next class.